The second audit is income tax audit for federal state. And, it's not new. It is always there. But the thing is, these audits are being geared up for the new coming year because IRS, one of a mainstream income IRS would receive is from their function of auditing. The IRS has this division that designated manpower and the budget for auditing. So income tax audit would never go away as long as we do pay income tax to federal and the state. So common trigger for income tax, this is important. And if you ask me this question back in the 90s, I will say, no, the data mismatch is not the common trigger. The common trigger is just the internal program the government put together. The government actually every year, they will give special project because their job, IRS's job, to make sure the compliance is there. People understand how to file taxes, right? That's their goal, to make sure the tax filing is done properly, correctly, accurately by the taxpayer. So with that, they of course know the area that easily had issue. So they would have a special program come out to audit, for example, 1065. So they would come out with a plan, how many to draw, in what parameters they would draw. So the name would come out, then they were disseminating that to the local office. So the local auditors will knocking your door and auditing you because that's a program effort. But in today's world, the computer has really changed government's way of doing business and also changed your ways of doing business. So it's data driven. It's data driven. So data matching is one of the top reasons for you to be audited. And I will tell you that we have taxpayer getting audited and out of blue, and the government sent a letter auditing them. So halfway through the audit, and the taxpayer realized that the reason the IRS was auditing them because they actually have a big income that is mistakenly the credit card income. You know how the merchant account, the 1099K, mistakenly that 1099K were issued to them personally. So it's sitting on their social security number. IRS goes, I'm missing, $1 million. No way. This taxpayer need to be audited. But the reality is 1099K belongs to their business. The business is a C corporation and doesn't even file taxes together with the personal. So it is reflected on the C corporation. The taxes is properly paid and everything is super good on the other side. And here the taxpayer individually got audited. So then that's data mismatch because you have set up your credit card with your personal social security number name. So the IRS saw you have $1 million income that you didn't claim. But in reality, this $1 million income is actually $1 million sales, belongs to the C Corp, and the C Corporation was reporting 6 million. So it is like, it's just a small piece of it. So the taxpayer didn't even realize, that 1099 went into the wrong place. So this is just a simple example for you to see how data mismatch triggers audit, right? So now IRS also have other ways to audit you. So what IRS does is, how when we file tax return, especially business return, they always ask you what type of business you are in and service you provide. You know why IRS care about that? Why? I mean, they get money from people, then they spend on whatever they want to spend. Why would they even care about whether we're a restaurant, a salon, or maybe insurance company? Why? Because they use that data to compile an industry average for what they know. And when they come up with that data, they do data mining, data analysis. They come out to say, as an insurance company, we should see the correlation between payroll and the income to be this way, about 35%. And we should not see cost of goods sold for insurance company, and that should be 0. And we should see professional service or office expenses at about 15%. And the professional service for insurance company, it should be, normally very low because insurance company are normally managed by the insurance, their brokerage company. So they have the larger insurance company taking care of them on the legal side and everything. So they normally don't have a lot of legal expenses. So that ratio is less than 0.5%. So with all of these study, and when you file your taxes and we give you, and we submit it to IRS, and then, we say your insurance agency, but then we put in the large amount of cost of goods sold on it, or we say you spend $500,000 for a lawyer, you think you're not going to be audited, immediately you will be ranked out as a non-normal. So that is data deviation score. So that will trigger you to be audited. Of course, there's other reasons to be audited. For example, you're a partner with me, and we split, and we don't see eye to eye, and we don't like each other. So I'm here and doing my partner tax return, and I just put a $900,000 income on you. I'm just gonna submit it to IRS, but because I don't see you eye to eye, so I just not gonna tell you what happens. So the third party submission to IRS, it become a reason for IRS to audit you because you didn't even know it is not on your return. And then this year in our office, we provide a service called data match service. And during the data match service, we actually will match the government data with the client's submitted data to us. And one of our client is actually, they are in New Jersey. So on the data, we saw some unemployment insurance claim from Ohio, from a different state. And then I find out is identity theft. Someone was using this person's social security and the name and filing unemployment insurance in a different state. So with that, we can resolve it, right? We can get rid of that income, resolve that. But this is just to tell you that how important that is for you to know what data the government has for you. So you want to be sure that everything you reported match to what IRS has. Is one layer of a security, right? So that can make sure that you submitted data, in accuracy, like everything is included. Now, and of course, under data connection from the third party, and then you have the whistleblowers. Whistleblowers get paid by IRS. And if you do whistleblowers, IRS collected $1 billion and you will get paid. So whistleblower program is an IRS program to encourage citizens to come forward for things were not done right in the corporation. So it is, of course, this can be abused, but also it is a good way to catch the wrongdoings out there. And I believe Anran's case was done by a whistleblower. Someone actually reported to IRS things that wasn't happening right in the organization. That's how that whole thing becoming to light. So of course, there's a couple other things I want to mention to you that triggers the income tax audit. If you are a sole proprietor business, yes, you trigger income tax audit. And if you are a renter, if you are a landlord and has a Schedule E filed on your tax return, yes, you trigger tax audit. Much more chance for you to be audited than someone who don't have that. And you can also trigger the audit when you have a lot of asset and cash in the other country, and you can trigger your audit when you claim ERTC and the CTC credit. It's just like almost like a little bank for you. You just have a lot of claim, yes, and that can trigger audit. So these are the common triggers for IRS audit.